What's going on, everybody? My name is Zach Hartley, and in this video I'm going to walk you through the 9 different factors that you're going to want to compare and analyze when looking at ETFs, and I'm also going to give you my ETF comparison tool, and I'm going to walk you through how to use it at the end of this video. So without any further ado, let's jump right in. Okay, so just to get us all on the same page here, ETF stands for Exchange Traded Fund, and it is basically a basket of securities that usually tracks an underlying index, and it can be bought and sold like a stock on a stock exchange, and it has very low fees and commissions, which is usually one of the most attractive features and one of the main reasons that people buy ETFs. Now, when it comes to different factors that you want to consider when choosing an ETF, here is the list. There are 9 different factors, and I'm going to walk through each and every factor in this video, and then I'm going to give you my free comparison tool that you can use at home to compare different ETFs in your own life and in your own portfolio. Now, to start us off here, we are going to start with the investment objective. Now, all of the screenshots that I am taking here are going to be focused on 2 ETFs. They are VOO and they are VFV. These are 2 ETFs that track the S&P 500, but one is in Canadian dollars and one is in US dollars. And if you just go to the website for Vanguard, or you just type in VOO or VFV, you will be able to find all of the screenshots that I am taking and using in this video. So the first thing you're going to want to look for is the investment objective. As you can see here, it is labeled as just objective here, and it says that the Vanguard S&P 500 ETF seeks to track the performance of a benchmark index that measures the investment return of large capitalization stocks. And so this is basically an ETF that tracks the S&P 500. So if that is what you are looking for in your portfolio, this could be an option for you. But if you are looking for, let's say, a dividend-focused ETF or an ETF that is focused on solar energy or renewable energy, then this might not be the right ETF for you. And this is how you're going to kind of narrow down that search rate in the beginning, is you're going to figure out what type of ETF you want to look for, and then you're going to make sure that that objective lines up with what you are trying to achieve. That is what we are looking for when we talk about investment objective. You're trying to make sure that the investment objective of the ETF aligns with your objective as an investor. Now, when it comes to the next factor here, we are talking about currency. Currency is super important, especially if you don't live in the United States, because if you want to buy a US ETF, you need to make sure you have US dollars, and you're going to be able to find that usually on kind of the overview page here by finding out either what exchange the ETF trades on. For instance, this one is the Toronto Stock Exchange, which only uses Canadian dollars, or it will also be listed as the currency right here. You can see Canadian dollars, and that's how you're going to be able to tell what currency that ETF is trading in. And this is super important, because if you need to convert your dollars into something else, or you need to convert into dollars, that could cost you money. It could also cost you some time and a little bit of hassle, and it could also have some tax implications. So that's something to think about. Now, the next factor here is the expense ratio, and this one is super important. And as you can see, VFV has a management expense ratio of 0.09. They have shortened it here to MER, and that is how much Vanguard is going to charge you in order to manage your money and keep your money in this ETF. This is an annual number, and so they're going to charge you 0.09% of your holdings on an annual basis in order to keep your money in that ETF. The next one here is dividend yield, and this refers to all of the dividends that the stocks within that ETF are paying out to the ETF and then to you. And so this is really nice, because this is the cash flow that is coming from the ETF. It's usually represented as the dividend yield, and this is usually paid out on either a monthly or quarterly basis depending on the ETF. Now, the next one here is the liquidity, and what I'm referring to when I say liquidity is the ease of getting in and out of that position. And the thing that makes it easier to get in and out of a position is higher volume, or more transactions and more people buying and selling the security. And so if you ever want to look at the liquidity, what you're really looking at is the volume. And so this is VFV on the Toronto Stock Exchange, and as you can see, it's probably averaging somewhere between 150 to 200,000 shares per day of transaction volume. And so that means that I'm probably going to have no problem getting in and out of this, because there's so many shares transacting. But let's say there was only 1,000 shares transacting on a daily basis, because it was a really small ETF. That might cause some concerns for me, because the spread is going to be larger That is the difference between the bid and the ask price, and it means that I might not be able to get in at the full size that I want or at the price that I want. It's just going to be a little bit trickier to execute those orders and get in at the exact prices that I want with full order sizes on both the buy and the sell side. Now, for me personally, I do all of my ETF investing and all of my trading and swing trading on Questrade, and there's a link in the description down below that will give you $50 in free commissions if you want to try it out. There's also a strategy on Questrade called Norbert's Gambit that will allow you to convert basically an unlimited amount of Canadian dollars into US dollars for like a $5 fee. And so if you want to see that, I've got a video on how to do that. It is available on Questrade, and there's a link down below. It will give you $50 when you sign up and start trading. Now, tracking error. This is the next factor that you want to consider here. And because most of our ETFs are tracking an underlying index, meaning that they're trying to get the same performance as that index. And so the tracking error represents the difference in the performance of the ETF versus the performance of that benchmark index. Here's a screenshot of the VOO. They call it the residual error rate here. And it's literally just the difference between the benchmark and the actual market price or net asset value of that ETF. What you are looking for here is something under 2%. If it is higher than 2%, there might be some concerns there. There might be some issues. It's something that you want to look into, but most of the time it's going to be fairly low. And if it's under 2%, it's not really something that you need to worry about too much. It's just something you want to kind of check off the list. Next one here is performance though. This one is important because this is going to give you an idea of what you can expect with regards to returns, but also with regards to risk. And so what you want to do here is kind of understand what the returns have been on an annual basis so that you can see what is the high of the maximum returns on an annual basis. Let's say it's 20 or 30%, and then the maximum loss on an annual basis is 15, 20, 25%, whatever it is. It will at least give you an idea of what you can expect on the high side and what you can expect on the low side. It is not going to give you a guarantee of future returns, but it will give you an idea of the expected volatility and the expected return that you should be able to make in that ETF. Now, the next factor here is the size of the ETF, otherwise known as the assets under management. This is how big that ETF is, or how much money has been put into that ETF and then invested into the companies, in this example, which would be in the S&P 500. Now, for VFV, you can see on the overview page here that the AUM, or assets under management, is 8.46 billion. This will give you kind of an idea of how much money is actually in this fund. Anything under that kind of 50 million, maybe $100 million mark would be considered a very, very small ETF. And so you just want to be cautious and kind of know, are you getting into something that is big, that has been around for a long time, that has a lot of backing and a lot of other people supporting it? Or are you getting into something that is kind of new and that is small and that is niche and that isn't very large yet? You just want to be aware of sort of where that ETF fits on that scale. This would be one of the larger ones here in Canada, whereas something in that $50 or $100 million range would be a lot smaller. Now, the last major factor here, and this is definitely a big one that you want to consider, is the taxes. The taxes are going to be really important here, but it's really going to depend on your personal situation. Some people are really focused on retirement, others are really focused on cash flow, others are really focused on growth. And so it really depends on what you are looking for and what your current financial situation looks like. But a couple of things to keep in mind. Number one, you have withholding tax on foreign dividends. If you are Canadian, any US dividends that you receive are going to be subject to withholding tax unless they are kept in an RRSP. You also have capital gains and dividend taxes, and then interest and other income are going to be treated as ordinary income. And so a couple of different tax implications that you should think about. It will take a little bit of research though. Now, like I said, I've put together a comparison tool for ETFs, and I want to share that with you right now. So this is the tool, and honestly, it's very simple. In the top two rows here, you have the ETF name as well as the ticker, and then in the bottom here, you have the 9 different factors that I just walked you through with regards to what you should be comparing when it comes to an ETF. So you've got the objective, you've got the currency, the expense ratio, the dividend yield, the liquidity, the tracking error, the performance history, and the size, and then the tax implications where you can write a couple of notes about the situation. And the idea here is that you should be able to easily compare the expense ratio and the dividend yield and the liquidity of these different funds so that you can better understand which one is going to fit better in your portfolio, which one is going to be better for you from a tax perspective, which one is going to give you the returns and the objective that you're actually looking for. Now, This spreadsheet is going to be available to download in the link underneath this video in the description. If you want to check it out, it'll be totally free. I'm just going to make it available. It's nothing complicated. You could probably set this up in a few minutes if you wanted, but at least this will give you a template to get started. And then you can just continue to fill in as many different ETFs as you want. And if you'd like to share it with us, that would be phenomenal. Send me an email and I will post it in another video. But that's it. I hope this video was valuable for you. And if you're interested in learning a little bit more about the stock market, I have a completely free course on Skillshare. You get 1 month free when you sign up with the link in the description to this video. There's over 14,000 students that have gone through it. There's over 400 reviews for you to take a read through, and there's over 2 million minutes of watch time that have been spent on that course. So if you're interested, it's 10 hours long. You can do the entire thing in a weekend, and it's totally free. It's the best free resource that you'll find online, and I sincerely appreciate you guys watching this video to the end. Thank you so much. Thank you for watching. Subscribe to the channel, hit that like button. Let me know if there's any other videos that you want to see in the future, and I will see you guys in the next video. Good luck trading, good luck investing, and we'll talk to you soon.